It's been a little over a week since the Ethereum London hard fork, and since that time, ETH has gone from strength to strength.
Guy, the pseudonymous host of Coin Bureau, is listing 5 big reasons to be bullish on Ethereum, positing whether Ethereum could eventually become as big as tech giant Microsoft. In a new video, the widely followed analyst names Ethereum's recent EIP 1559 upgrade, which puts pressure on the supply of Ethereum by burning a portion of the gas fees rather than giving them to miners, as one important bullish catalyst. He also lists the upcoming Ethereum 2.0 upgrade, bullish on-chain signals, Wall Street adoption, and the highly optimistic options prices as reasons to be an Ethereum bull. It's hard to take a look at all these fundamental factors and not be incredibly optimistic about Ethereum's future. The London hard fork has shown just how smoothly the Ethereum community can execute fundamental protocol upgrades. It was a great demonstration of what we could expect to see when the 2.0 upgrades start being rolled out. With that proof-of-stake merge, we're going to see Ethereum become ultra-sound money that will have a deflating supply year on year, day by day, block by block. And it seems as if most of the crypto community agrees. Ethereum is being stacked, staked, and otherwise removed from the open market. It's being held as a rare store of value that will be in much shorter supply 1 year from now. And of course, it's not only us that are trying to hoover up that ultra-sound money. Institutions are chomping at the Bitcoin, or should I say Ethereum, as they continue to accumulate more of it. This is a theme that I don't see slowing down anytime soon. Taking all of these factors into account, I can see why options expiring next year have such high strike prices. Market momentum is on our side, and the Ethereum bull is not running out of steam. Welcome to Savvy Finance. A big shout out to all our viewers and subscribers. We appreciate you more than we can express it. Thank you very much for watching our videos. Let's take a look at the clip from the Coin Bureau to hear from the horse's mouth yourself.
As if on cue, ETH started being burned as base fees began to be paid. There are a number of websites that track the burn rate, but at the time of shooting this video, we had over 28,000 ETH burned and counting. This equates to about 36% of all the ETH that was issued. So what that basically means is that the ETH inflation rate has been reduced from about 4.2% to 3%. Now what's important to understand here though is that it's not deflation, but a reduction in the inflation rate. That's because you still have block rewards that are being awarded to the miners. However, due to that burn, the emission rate has been reduced. And you can see exactly what that looks like with this graph over here. Now, of course, this should still be bullish for ETH. Think about it like this. If you are willing to pay X for ETH before the upgrade based on the level of scarcity and demand in the future, surely that scarcity price should be worth more in the future post-fork. This is exactly the reason as to why many people place so much emphasis on Bitcoin halvings. A reduction in supply growth impacts on asset scarcity. It's not only that, but it's the fact that there should be less sell pressure on the market. Miners are more likely to want to hodl ETH on their balance sheets than sell immediately, precisely because they think it will be worth more in the future. Of course, less selling pressure by miners means less impact on the price. This is perhaps the reason as to why ETH rallied post-fork and didn't dump as many may have been expecting. Then, when it comes to fees on the network, there wasn't a particularly marked change. Some users were disappointed, but as mentioned earlier, this was not the goal of the upgrade. There is a benefit though when it comes to the usability. Whereas before, users would just pay a gas fee that they thought would get the transaction through, they now have 2 more transaction parameters. They can set both a max fee for the transaction and a max priority fee. The max fee is the maximum they are willing to pay for the transaction in total. This will include the base fee and the tip. If the base fee is above the max fee, a transaction will not go through. However, by further adding a max priority fee, the user can be more specific as to the amount they're willing to pay for a tip. Therefore, if the max transaction fee is below the base fee plus the max priority fee, the user gets a refund. Now, apart from this, another reason why the new transaction mechanism is more user-friendly is because the user can easily send an optimized base fee at the moment, knowing exactly how much it is. They have certainty around their transaction at that block and do not need to guess about gas fees for future blocks. Now, of course, this benefit will be more noticeable to those of you who are regular DeFi users. But it's what EIP 1559 means in the context of the upcoming ETH 2.0 upgrade that's the most exciting. This benefits us all, and in a big way. As you can no doubt tell, I'm quite an ETH bull. It's hard to take a look at all these fundamental factors and not be incredibly optimistic about its future. The London hard fork has shown just how smoothly the Ethereum community can execute fundamental protocol upgrades. It was a great demonstration of what we could expect to see when the 2.0 upgrades start being rolled out. And with that proof-of-stake merge, we're going to see ETH become ultrasound money. Money that will have a deflating supply year on year, day by day, block by block. And it seems as if most of the crypto community agrees. ETH is being stacked, staked, and otherwise removed from the open market. It's being held as a rare store of value that will be in much shorter supply 1 year from now. And of course, it's not only us that are trying to hoover up that ultrasound money. Institutions are chomping at the bit, or should I say ETH, as they continue to accumulate more of it. This is a theme that I don't see slowing down anytime soon. Taking all of these factors into account, I can see why options expiring next year have such high strike prices. Market momentum is on our side, and the ETH bull is not running out of steam. So I want to leave you with this final thought. If ETH was at 17K, that would give it a market cap equivalent to that of Microsoft. Is that inconceivable, knowing exactly what Ethereum will one day be powering?
In another news, cryptocurrency trader and analyst Scott Melker, who hosts the Wolf of All Streets podcast, has revealed he sees the price of Ethereum pushing towards the $10,000 mark in 6 to 12 months, while Bitcoin could hit six figures in the same amount of time. Speaking to Kitco News, Melker, who is the author of a crypto-focused newsletter and last year was named Influencer of the Year for North America by crypto exchange Binance, commented on the U.S. infrastructure bill, which includes a crypto tax provision with what were deemed unworkable requirements. These requirements were addressed by a growing number of lawmakers, something Melker noted as raising awareness and actually causing more people to buy than to sell. He added that the bill is talking about printing over $1 trillion out of thin air to pay for a bill that has absolutely nothing to do with cryptocurrency, and yet cryptocurrency provision froze the bill for 3 or 4 days. And we had the entire world talking about Bitcoin and the crypto industry. Melker also pointed out that the cryptocurrency market may soon benefit from the U.S. Securities and Exchange Commission approving a Bitcoin exchange-traded fund, ETF, he said. The approval of an ETF would be the biggest single event in the history of Bitcoin for that large wall of money to have the confidence to enter pension funds, endowments, sovereign wealth funds. They will come in when there's an ETF. The analyst added that a Bitcoin ETF would be a catalyst for real institutional adoption of the cryptocurrency. Per his words, sensible regulations may also be introduced by SEC Chairman Gary Gensler, which would also benefit the industry. To Melker, reasonable regulation that protects consumers is a good thing and would likely open the door to a lot of big institutional money that's waiting on the sidelines for that sort of green light to enter the space. Taking all of this into account, the analyst pointed out we are seeing institutional interest come back into the space and predicted Ethereum could be moving towards the $10,000 in 6 to 12 months, while Bitcoin could be in six-figure territory. I believe that this correction is likely over and that we should see new all-time highs by the end of the year. I would not be surprised at all to see Bitcoin trading in six figures within the next 6 to 12 months or Ethereum even pushing towards $10,000 in that time. He added that over time, Bitcoin could hit 7 figures per coin, while Ethereum could move to $20,000 or even $30,000 as reported. Former Goldman Sachs executive Raoul Pal has said he believes the price of the second largest cryptocurrency by market capitalization could go to $20,000 this cycle based on Metcalfe's law. At Savvy Finance, Ethereum was our third largest crypto holding after Bitcoin and Cardano. We're certainly looking forward to having Ethereum at $10,000 or more soon in the future. If you are yet to invest in Ethereum, go buy some right now while it is still affordable. Till our next video, please stay savvy.